You sit down at the charts, swear to yourself today you will stick to the plan, and 3 hours later, you break. You take a loss, the market runs without you, and you just click again to get it back. The issue here is biology. The human brain is wired for survival, not strict trading discipline. When you promise yourself massive overnight overhauls, like vowing to never revenge trade again, your nervous system registers that sudden shift as a threat. The brain rejects the massive change to protect what is familiar, but a tiny change slips right past the alarm. That brings us to Kaizen. It's a Japanese philosophy of continuous improvement through micro changes. We are going to build a 14-day system using changes so small that your brain doesn't bother fighting them, quietly building new pathways that cut bad habits out at the root. To build this system right now, you need to write it down physically. Grab a pen and a piece of paper. Getting out of a self-destructive trading loop requires bypassing your own biological defenses. We are going to outsmart the urge to self-sabotage with absolute simplicity instead of trying to beat it down with motivation. Step 1 is identifying the single worst trading habit you have. Think about the one that drains your account the fastest and write it at the top of your paper. Bad habits in trading behave like physical reflexes. You take a loss, you feel the urge to fix it, and you act. To break a reflex, you have to insert a physical gap. You need to control the exact 30-second window immediately following your trigger to interrupt the circuit. We do this by assigning a physical micro-action to that moment. If your habit is revenge trading after a loss, your action is to stand up from your desk and take one sip of water. If you take random trades out of boredom, your action is to slowly count from 1 to 5 before you touch the mouse. Right next to your bad habit, write down your specific micro-action. Keep it entirely physical and completely detached from the charts. There is a strict rule here. The action must take less than 10 seconds to complete. It has to be so ridiculously easy that you have zero excuse to skip it, even when you are frustrated. A blown account rarely happens on the initial losing trade. It happens during the hours of tilting that follow. Mastering the 30 seconds directly after a trigger cuts off the spiral before it even begins. Step 2 draws from the Japanese concept of hara hachibu. In daily life, it means eating until you are 80% full. In trading, it means stopping your session while you still have the emotional capacity to continue. This chart maps what happens inside your head during a long session. As you take consecutive trades, your dopamine levels spike. You feel engaged and confident. But simultaneously, your baseline alertness and critical thinking are plummeting. The moment those lines cross, you start making reckless decisions. To protect yourself, write down a hard limit for maximum allowed trades per day. Once you hit that number, the session is over. Choose a number that feels slightly uncomfortable. If you usually take 5 trades, set your limit to 3. The goal is to force yourself to walk away while you still feel a strong physical urge to click. It is deeply uncomfortable to walk away from an active market, but leaving potential setups on the table is the necessary price you pay to prevent total emotional burnout later in the week. Step 3 requires you to completely abandon your deep analytical trading journals for the next 14 days. We are putting a freeze on tracking complex financial outcomes and emotional paragraphs. Instead, draw a simple 14-day checklist on your piece of paper. This is the only tracking tool you will use. At the end of every trading session, you are only allowed to write down one single sentence on that list, answering this exact question: what rule did I keep today? You write down things like, today I drank water after my first loss, or today I stopped at exactly 3 trades. This exercise is entirely disconnected from your profit and loss. You are documenting a new set of behaviors. Logging these timing acts of self-control generates clean, consistent dopamine. You start getting addicted to the feeling of executing your own rules, which rewires your brain much faster than chasing random financial wins. Step 4 incorporates wabi-sabi, the acceptance of imperfection. If you trade long enough, you will eventually have a day where you are tired, the market moves too fast, and you snap. You are going to break your discipline. When that happens, the single undisciplined trade isn't what destroys your account. The real threat is the shame spiral that follows. You start insulting yourself, you decide that you're a failure, and then you trade randomly just to escape that feeling. To survive those moments, you need an automated response. At the bottom of your paper, write down your reset rule. The protocol is rigid. When you break your rules, you immediately close the trading platform. You do not review the trades, and you do not analyze what went wrong. Your only task is to wake up the next morning and ask yourself, did I come back to the desk? A mature trader isn't someone who never makes a mistake. They are simply the person who returns to their baseline the fastest. A heavy loss or a lapse in judgment is just temporary data on a chart. But if you sit there and analyze it with self-blame, you turn a single bad day into your permanent identity. Take a look at the piece of paper in front of you. You now have a completed 4-part plan to run for the next 14 days. This system works because it abandons the reliance on raw willpower. The actions are so small, so quick, and so physically frictionless that your brain's threat radar simply lets them through. Take that paper right now and physically attach it to your trading monitor. Keep it exactly where your eyes go when things get stressful. For the next 2 weeks, do not worry about becoming a perfect, highly profitable trader. Your only goal is to consistently execute these tiny habits, proving you can destroy yourself slightly less today than you did yesterday. To lock this in, scroll down and write your specific micro action in the comments below. Let that be the official start of your